it's been about a month since we last met. One thing that I wanted to clear up from the last video, I don't think I was super clear about the value that I see in Bitcoin. And what I wanted to say, or what I meant to say, is that I didn't, when I first purchased Bitcoin, I didn't appreciate how long it would take for its explicit value, so its price, traded price, to catch up to its implicit value. I thought it'd be far quicker than it's been. Maybe we should be at 100 grand by now. $1 million by now.
I thought you were about to do a retrospective price prediction, which I thought was going to be awesome. Because if that's not accurate, no price prediction ever will be. But yeah, I totally agree with that. I think the monetization process of a new monetary good, it takes far longer than those that kind of start going down the rabbit hole early appreciate. And I think that's fair. And I think there's far more price action on short-term speculation than there is on real world utility. And the real world utility value is highly volatile and creeps up over time. But the speculation value goes all over the place. And I think that's possibly what you're experiencing.
Yeah, definitely. And I think we see that in the traditional markets as well, where there's a long-term view of a particular asset or currency and a short-term trading view, which is trading on whatever's happening in the market at the time. So yeah. So gents, what's exciting you at the moment in the world of digital assets, crypto?
Exciting. I find the whole sector exciting, but and the underlying principle of what we're all aiming at in this sector, and that is, separation of money and state. And I think it's important that we don't lose sight of that as the ultimate goal of what this disruptive technology is all about. That continues to excite me. But I also think that I'm spending far more time trying to be open-minded and not go down a real echo chamber sort of mentality of Bitcoin is the only thing that counts, and trying to listen to far more conversations by people far more knowledgeable than I am and with more experience that are discussing potential problems and pitfalls for Bitcoin. And that's been really what I've spent the most time on this last week. So talking around the block reward, as that decreases, does that disincentivize miners? And do we have a decrease in the security of the blockchain if the value of Bitcoin has not increased to the point where the transaction fees compensate for that drop in the block reward? So, potentially over the next 10, 15 years, we could see a hard fork of the Bitcoin blockchain where there is an adjustment to the inflation policy of the currency. And all those T-shirts that say 21 million could be jeopardized or inaccurate. So yeah, I suppose that's what I've been looking at, because the monetary policy relies on the value of Bitcoin going up to those values you spoke about earlier. The $1 million valuation. It relies on that for the fees to be significant enough to encourage the miners to continue spending a large sum of energy and money in securing that blockchain. And if the value doesn't go up quickly enough, then why would you mine Bitcoin, right? Especially with the cost of energy going up the way it is.
Yeah.
So that's the question. But then the people that are arguing against Bitcoin and potentially arguing in favor of Ethereum, I struggle with some of their arguments as well. I still struggle with an argument that suggests that Ethereum can become ultrasound money or whatever they call it, because to me, it doesn't feel like something that can ever be global money, because you're replacing one central owner of the monetary system in a central bank with another central party in the Ethereum Foundation or whoever controls it. It's definitely far more centralized than Bitcoin. And it might not be one person, but it's definitely a handful that can change the monetary policy of Ethereum. And there are examples over Ethereum's past where they were able to roll back the blockchain and delete transactions, and that could never happen on Bitcoin. So yeah, I struggle with Ethereum in any way challenging Bitcoin's narrative as the takeout for global reserve currency, but I appreciate some of the arguments that suggest Bitcoin's not perfect for it either in its current state. And the culture around toxic maximalism in the Bitcoin community, I think, is a problem, because right now, if there were any toxic maximalists on this call, I would be called a shitcoiner for even mentioning that there's a problem with the inflation policy of Bitcoin, and that potentially we could have more than 21 million. That wouldn't even be acceptable to raise in many Bitcoin forums, and I think that's a problem. I think the community of Bitcoin needs to be far more intellectually driven and challenge each other and have these open discussions rather than just dismiss anything that challenges the narrative of every Bitcoiner is a red meat eating, gun toting, freedom fighting, nutcase. Like I think it should be far more inclusive and far more and more open to debate and challenge. So yeah, that's basically been my focus. And when you say has it excited me, I suppose in some ways it challenges me and decreases my excitement of what Bitcoin can do. But I think it's important that we spend the time on these topics and explore them. So that's me, Peter.
Just going back to what you mentioned about the separation of money and state, I guess I wouldn't put it in the same words as you. I guess the words that I would put it in is that the current system is broken. So I just want to implement a new monetary system which has the fixed number of issuances where the central bank can't manipulate the supply. That's my biggest focus. But is that kind of what you're getting at? Where you're saying you want to separate the government and the supply of money?
Absolutely. I think history shows that if a central bank or government has the ability to inflate the money supply, they will. Like that's happened throughout civilizations and ages. And it happened in the Roman Empire, for example. Like if you've got the ability to increase the money supply for your own means, you will do it because politics is usually around short-term goals, and it achieves short-term success in inflating the money supply to cover up problems in the short term. What I'm suggesting is a separation of money and state. So the same way you run your family, I run my family based on it's an output, and try and balance those two, and try and have a saving fund in place for an emergency. That is the way government should run. And if there's an emergency that they cannot afford to pay for, then they have to issue some sort of debt instruments to the public of that sovereign country, and the citizens will decide whether or not that crisis is worth paying for with their own savings. And that used to happen back in the days of the gold standard with war bonds. So when a government or country like the UK went to war, they would issue war bonds, and the citizens of the country would be able to vote to go to war or not to go to war by buying those bonds. And that was, to me, that's a far more effective system than us having no say in things like war or spending on crises. So if you support the spending in that crisis situation, you buy the bond, and if you don't buy the bond. And the first time I believe that system broke down was in 1914, when the Bank of England issued war bonds that were not bought by the public, and the Bank of England bought up their own war bonds effectively. They bought up 154 million of a 350 million issuance of war bonds, and the media told the country that it was oversubscribed and everything was just dandy and everybody was supporting the war effort. So as soon as they realized they could do that and then just put those war bonds on their own balance sheet under a random name of certain securities without admitting that they bought their own bonds, and I think that's where the system broke down.
Non-marketable securities, perhaps.
Yeah. Like it's just crazy that you can do that, right? So yeah, I'm just looking for fiscal responsibility. That's what I'm looking for. I'm looking for a government that has to act responsibly with the amount of income they get and choose how best to deploy that. That's seems logical to me.
I guess that's where Liz Truss didn't last too long in the office.
Don't get me started on Liz Truss.
Responsible.
Well, Liz Truss, I think I wouldn't be surprised if she was put in there just to make, knowing that Rishi would be in within a month or two. Like I really believe that they knew exactly what was going on, and maybe Rishi comes in a position of far more strength now after the Liz Truss debacle than if he'd gone in straight away. So I think I always think about the conspiracy side of things, but I don't think that she was ever expected to succeed in that role. But there's going to be some great trivia questions around her in the generations to come. Like the only British Prime Minister that's served since Doctor Who started airing without a new episode being aired under her watch. It's an amazing claim to fame. And she spoke at the Queen's funeral, and like she was only in power for 40 odd days, right? So pretty amazing stuff. But anyway, And conspiracy theory aside, yeah, some of the policies that were brought out under her watch were very questionable, of course. Not exactly fiscally responsible.
There was a book that was supposed to be released in about 2 weeks that's talking about her rise to power, but it's quite untimely in the release date and her.
Yeah, you got to feel sorry for those authors, don't you?
Yeah.
Or the publishing company if they paid the authors already. Oh, well, them the breaks. Hey, what I'm excited at the moment is the UK government's looking at regulating crypto like they are financial instruments. I think that's exciting.
Correct.
I think that a lot of people are anti-regulation, but for me, people have lost a lot of money in this space over the past couple of years, at least. So not just from hacks either, but from, we saw the Terra Luna stablecoin go under. We saw Celsius collapse as well. And I was just hearing that Celsius couldn't get a license to operate in the UK. So potentially that saves some Britons from getting exposed to Celsius. I know some did, but so yeah, I think regulation's a positive thing. Governance is a good thing, and hopefully, as per what Rishi Sunak has said in the past, that crypto or digital assets are meant to be a growth area for the UK, something they can focus on post Brexit to differentiate themselves in that part of the world. Whether that ends up being justification to launch a CDBC and control all our lives, I'm not sure. But anyway, I think that's one positive thing, or one thing I'm excited about. The other thing that I'm excited about is that Bitcoin looks like a risk-off trade at the moment. So you've got Facebook losing, 40% of its value this week, I think it was. You have Amazon going down. So Bitcoin's actually performing quite well at the moment. It's around 20,700 at the moment. It seems to be holding its value relatively well. And I think Bank of America even made the comment this week that it's acting more like a risk-off trade, a safe haven asset. Dare you believe it? So that's something else I'm excited about. Sorry, go on.
No, I was just going to say, I think it's really shown resilience in the past 2 months, despite all the macroeconomic stuff that's happening in the background. There's still downward pressure from all the narratives. There's no good news stories, but it's kind of hovered around the 19K, 20K mark, predominantly 19K. And then just this last week, there's been a pump up to 20. But I just wanted to touch on one thing that Mike mentioned, which was like not wanting to be stuck in an echo chamber, because I think inherently, because we're all in this space, there is a bias for it to succeed. We have vested interest for it to succeed as well. So I think it's important to be mindful that you're always trying to seek that confirmation bias in wanting Bitcoin to, or maybe you're naturally filtering out stories that you don't like to hear. So yeah, I think Mike brings up a really good point in trying to make sure that you keep your eyes and ears open to good or bad stories that you hear, and just being mindful of that. But I think
the tribalism isn't healthy, like he was mentioning. It can go a bit too far.
I totally agree. And I think it's worth finding and recommending like podcasts where they do focus more on balanced views and have open debate rather than just get that echo chamber we're talking about. I think when you find those podcasts or those interviewers that are willing to have those open conversations, I think those are worth subscribing to and sharing around, because they're the good ones. I'll find the one that I'm looking at the most at the moment is Unchained. I don't know if either of you have listened to that, but it's a Korean, I think Korean interviewer that runs that podcast, and she's brilliant, and she's been in this space for a hell of a long time, and I think was the first mainstream journalist that's decided to cover crypto full time about 7 years ago, I think, and she's fantastic, and she brings on more controversial characters, people that have been cancelled by the Bitcoin maximalists, and listens to them and facilitates open debates between different characters. I think that's worthwhile listening to.
Agreed.
I'm not aware of that one. I'll have to check it out.
I think She had Doquan on her latest one.
That's right.
Very, very good.
Where is Doquan located at the moment?
No one knows.
He should be in jail. For answering questions, at least.
No,
Hey.
yeah. No, I was just gonna say, like, things that I'm excited about is, as much as you wouldn't put these two words in the same sentence, but I am excited about the new accounting frameworks that FASB was announcing. Like, they were saying that, voted in favor to put some guidance for fair value accounting for cryptocurrencies, which I think is much needed, because over the past 13 years there's been no guidance. I think there was maybe like unofficial digital asset working groups of like a number of different accounting firms that put unofficial interpretations of the accounting guidance. But it's really exciting that FASB has announced officially that, okay, we are going to look into this in the future.
Yeah, it is good, isn't it? So, and just to elaborate on that further, so they've said, we don't know when I'm not sure when it's going to become effective, but essentially they said, if you're accounting for digital assets, so like Bitcoin and Ethereum, as intangibles, then you can account for as fair value through comprehensive income. So comprehensive income, I'm not sure whether that means the income statement or other comprehensive income yet, but at least it's all going to go into the same, it seems like it's all going to go into the same bucket, which is helpful, because at the moment, I think US GAAP initial measurement is at cost, and then you've got to take impairment if the price of Bitcoin goes down. That goes through your income statement. But if it reverses, so if Bitcoin price goes up, you don't get to put it through your income statement.
You're right. It's just downside, no upside. MicroStrategy was struggling with that, I think, because they issued a separate statement showing their Bitcoin at market values for investors to know, as a separate addendum to the financials, and the FASB were not happy with that. I think they forced them to withdraw it, actually.
Yeah, I think the GAAP financial statements don't make any sense for any public companies that hold digital assets. Like you said, everything's written down, and the reverse, it doesn't get written up.
Yeah, exactly. But yeah, in terms of the timing, Peter, I read some articles that suggested that the earliest it could come in would be around March 2023, but I think that's pretty optimistic and likely to be later than that. I'm not sure if there's another round of voting that has to happen before it does become official. That's worth checking. I know it's likely it will be, I think, from what I've read, but I think that might have just been the first round of votes to decide whether or not they would consider it or something like that. Yeah, the red tape. But
it'll take some time to actually put in code.
Yeah.
I mean, if you have a look at MicroStrategy's financial statement, I think the latest one I could find was 2021, but they were holding up just under 130,000 Bitcoin. And I think so they have the comparative. So in 2020, I think there was like $70 million of impairment losses. In 2021, there was $800 million of impairment losses. I imagine that number to be far greater in the 2022 statements. But yeah, like it's just a loss that's going to be hitting the bottom line, and isn't realized. It's just an impairment loss that's being held in the books.
And I think there's some conjecture over the Tesla statements who would also be under US GAAP, because Musk said that they sold some Bitcoin for liquidity purposes, but then there's a lot of people commentating that there was a bit of a smoothing of P&L, because although you have to write down the value of Bitcoin, you can't write it back out. If you sell it, then you can actually recognize the gain in your profit and loss. So some commentators thought it was a bit of a smoothing effect for the income statement of Tesla, even though they sort of classified it as a liquidity sale.
And that's exactly what happened. Like, if you look at the 2021 financial statements, that line for digital asset impairments, it's not a negative number. It's actually positive, because they sold out of a number of positions just to get rid of that that line.
Yeah.
But I think it was a couple of months ago where they sold out of 75% of their holdings. So it seems like Tesla's a bit more on the, I guess, active management of their impairment losses rather than MicroStrategy just hitting it on the chin.
Yeah, interesting. I mean, which CFO hasn't walked around the floor at the end of the financial year and looked for some money? It happens in every organization. Not that I'm saying it happened in Tesla. They did say it was for liquidity reasons, but yeah. Are you guys okay if we look at the difference between US GAAP and IFRS?
Sure.
So IFRS seems to be a bit more lenient towards digital assets. So,
Exactly.
well, I had a look at. I just Googled companies who own Bitcoin, and it came up to a website which showed all the public companies that own Bitcoin, and the vast majority are North American companies, whether they're United States of America or Canada. So I had a look at one. There was one Australian company on the list, Digital X. And they give investors, institutional investors, exposure into digital assets, and so they're the only publicly listed company I could find that issued financial statements using IFRS for their digital asset holdings. So that was interesting to see how they classify and measure digital assets. But essentially under IFRS, so there was a statement issued by the IFRS in 2019, and there's two ways that you can classify and measure digital assets that meet their pre-existing or meet their criteria. So number one is intangibles, and that's generally for the hodlers. So if you're not planning to sell your digital assets in the near term, if you are intending to sell your digital assets in the near term, then you would account for it as inventory. And it's akin to the commodity broker trader model under IFRS. So if it is an intangible, you've got two measurement choices. Number one is cost. So your measurement of cost on the day that you buy it. And then after that day, it's cost less the impairment losses. So same as with US GAAP, if the value falls down, you write back the difference to income statement. But if the value of Bitcoin goes up, you get to reverse that out of the income statement as well. So that's a good thing. There's also cumulative amortization if it's a finite asset, but for most of the digital assets we deal with, they've got an indefinite life. So that's the cost model. Under the revaluation method, you can use this if your asset has an active market. So the funny thing about IFRS is that although there's no specific standard for digital assets, it refers us back to the IFRS 13, which is fair value, which is what as product controllers or financial controllers we use for the financial instruments, the financial assets and liabilities that we measure, in banks and hedge funds. So essentially, if there is an active market, so if there's ongoing prices, then you can use that to measure fair value. And so the way that we measure it is initially at cost, and then subsequently at fair value, less any impairment losses. Now, because you're measuring it at fair value, that's already going to incorporate impairment losses as well. So changes in fair value, where do they go? Well, changes in fair value go through the income statement if they're a decrease in fair value. If it's an increase in fair value, then that goes through other comprehensive income, unless you're reversing out a previous loss that was recorded in the income statement. So the thing I like about IFRS is you have that symmetry.
Is that under IFRS, it's capped at the initial cost. You don't write it up above where the cost was. Is that correct?
If it goes above if you're selecting the revaluation method, then yeah, you do write the value up, but that goes through other comprehensive income.
Okay, got you. That's interesting.
That's the difference.
When it reminded me of one other piece of news Peter, one other piece of news that came out the last few weeks was that I think in South Africa, cryptocurrencies have been classified as financial instruments, which I suppose all these small wins around the world, but it's worth noting that as well. That's linked to what you were saying. Yeah,
it is interesting how they're referring. Even US GAAP tells you to refer to the fair value standard as well, ASC 820. So it's looking more and more like these are financial assets and liabilities. That they just need to update the definition, perhaps. to be able to officially do that. Just to finish off, one more thing on that. So inventory, I mentioned commodity broker traders, they also use the inventory measurement of fair value less cost to sell. So if you're holding your digital assets to sell in the near term, so if you're trading them, then you get to account for them at fair value, less the brokerage costs to sell, exchange fees to sell, and then that goes through the income statement. There's no touching other comprehensive income. So that kind of makes sense if you are a trader and your operations are based essentially off the fair value of that asset. I think that's a good treatment.
So at the end of any financial period, when you're valuing your balance sheet, you'd revalue your inventory, do like an inventory stock take, count them all up, and revalue those at the fair value at the end of that accounting period, and there'd be like a gain or loss on stock take and revaluation of inventory that goes through your income statement.
Yeah, there would be, and there should be plenty of transactions in that period as well to show that you are selling them in the near term. Otherwise, it'd be more appropriate to treat it as an intangible.
Yeah, yeah.
So, I think the one thing about having this fair value through other comprehensive income is that if you do make gains in that category, you can't pay them out as dividends. You can't return capital to your shareholders in that in the form of a dividend. So they'd have to be recycled through the income statement. So they still form part of your equity base. That's good for shareholders. You've got, if there are gains sitting in there, that's good. But they're not going to be able to get a return on that income in the form of dividends. Increasing their treasury.
Most tech companies tend not to pay dividends, don't they? I suppose the view is they can do better with the money than by giving it to their shareholders. Like Tesla doesn't pay dividends either. And I think at some point we should have a talk around what's the more Ethereum side of things, what that means for the financial industry, and could there be any use cases for financial accounting based on these programmable blockchains, and where could that possibly go? Could there be applications built on Ethereum and on smart contracts that help the accounting industry as well? I don't know. It'd be worth exploring that.
Yeah, the challenges facing the CFOs, the financial controllers out there when it comes to the accounting standards. It seems like now that Ranald mentioned US GAAP, it's providing clarity around how to treat these digital assets, but there's still some digital assets out there which require further investigation or a more detailed analysis, like stablecoins. So I was doing some reading on stablecoins, and essentially you've got to look at the contract that's been issued between or been provided between the issuer and whoever owns the stablecoin, and that really determines whether it can be considered as a financial asset or not. I think that the biggest work is going to be done by the auditors who've got to review these annual reports, these financial statements, but I'm not sure what's happening with the privately held companies. For the privately held companies, maybe they're just making a decision to account for them as fair value through P&L or fair value through OCI, and if they deviate from IFRS, then they just make a statement as to why they think it's best to do that, which you can do. I mean, it's not the bridge or the road most traveled, but if there's a good reason for it, and if you're dealing with financial instruments or assets which are essentially the new frontier of we're in a new frontier when it comes to these things, it's probably justified, I think. What do you guys think?
Yeah, I think the challenge comes with the small startup companies. What are they trying to achieve through their financial statements? Are they trying to achieve a positive audit opinion, which helps them get more investment income in, or are they just trying to have a form of record that they keep for themselves? If it's the latter, then go for your life, do what you want, deviate. But if you're trying to get that positive audit opinion, you've got to toe the line.
In my experience, when I deal with auditors, it's always what was done last year and what's different this year. And because there's nothing that's done in previous years, there's no benchmark or baseline for them to work off. So it's almost as if we're just at that beginning state at the moment, which is also credit to how, you know, how early we are on this journey, right? Like the fact that there's no accounting guidance, the fact that auditors don't really know what they're doing. And even some companies, like after getting audited, the partners refuse to sign off on the audit opinion because they're just not comfortable being liable for anything that happens after that. So it's still very early on, but yeah, it's two sides of the coin. It's not only just us, it's the auditors that need to upskill as well.
Yeah, I hadn't thought about that.
I mean, do we think that the main reason why there's not been more institutional adoption is down to these accounting rules, or is this just a little side hustle and side conversation, but the real reason for lack of adoption lies elsewhere?
I reckon it's not the main reason. I think it's a reason, but definitely not the main reason. I think regulations are a big one for institutional adoption, because at the end of the day, I think like I guess most of the corporations, they have like a remit to invest in what's like regulated assets. They're more stringent on KYC, whether or not you're supporting terrorism funding or whatever the bad eggs in Bitcoin are spending it on. I think that's probably more. It feels like that's a larger contributor than just the accounting standards, even though having very meaningless financial statements, I think is still a bit of a hurdle.
When we say regulation, Ranald, what single piece of regulation would make the biggest difference to the sector then? So what are we looking for in terms of regulation? Is it like tax regulation? Is it regulation of the exchanges so that they become more trusted counterparties? Like, what do you think would make the biggest difference?
I think at the moment it will be like just having a look back at the past 3 or 4 months. It'll be, how do we avoid a meltdown that happened, like what Terra Luna and 3AC going down, even though for 3AC, for example, they had in place a limit to how much 3AC should be leveraged, how much they could be leveraged, but they were clearly MAS were ill-advised, and 3AC were kind of deceptive in how much leverage they were putting on their books. So I guess in that sense, maybe it's regulators need to have more like submissions or reporting requirements for corporations that invest in cryptocurrencies or digital assets.
But I suppose what you're referring to there is counterparts that are taking on client funds. So if I was a public traded company and I wanted to buy Bitcoin, I wouldn't necessarily need to lend that out and trust anybody else with my Bitcoin. I could take self-custody of that. So regulating counterparts that take other people's or companies' assets, that's one thing, and I agree that's necessary because that's to protect retail investors. I'm fine with that being protected, and I think that would be a good thing. But I'm not sure that would impact into institutional adoption. I think institutional adoption is I'm not sure what is holding that back, but I think it's perhaps like trust in the sector and the negative media spin on the sector from a energy consumption perspective, and every company's trying to be ESG, and the perception that cryptocurrencies are used by criminals, like those kind of headlines, I think are what holds it back. But I don't think that a company that holds other people's cash, regulating those, is going to make institutions adopt, or it might make retail. Like I know, like companies that are in the Celsius space, holding them more to account would be a positive for the ecosystem. But I'm not sure if I was a MicroStrategy equivalent that I would put my Bitcoin with Celsius.
Yeah,
Well,
agreed. I think from the perspective of companies that want to hold it in their own treasury, yeah, I'm in agreement with you. I guess I was
Mm.
thinking more perspective of if you have larger retail, I guess, depositors, then vice versa, you would have larger institutions, um, yeah, adopting and um, borrowing cryptocurrencies as well.
well,
Yeah,
But
I mean, sorry, Peter.
the BIS did a survey recently to see how much crypto was being held at banks, and I think from memory, don't quote me on this, it's around 8 billion. I think there's about 8 billion being held in all around the world at different banking organizations. I didn't see what they're holding or where the split is, but look, I think that the market's still so young. If you're an organization, and particularly a bank, you've already got so many different challenges facing you. There's so many headwinds in place already. You've mentioned ESG. We're about to walk into potentially a recession. But before that, before we're even talking about a recession, what's driving banks or companies to get involved with this? If you've got clients on the other side, then there's got to be a client demand for it. Now, if there's a client demand for it, you don't want to give your clients access to something which is going to hurt them. So I think the Commonwealth Bank gave access to their clients. I'm not sure what cryptocurrencies they gave them access to. I know it was Bitcoin, probably Ethereum. I'm not sure if it's any dodgy stuff, but essentially you don't want the reputational risk associated with digital assets at this stage, because there is still quite a lot of risk with it. It was only recently that we saw the collapse of Terra Luna. It was only recently that Bitcoin fell from $60,000 or $70,000 down to $20,000 now. So I think that the incentive for companies to adopt digital assets, I don't think it's there yet. I think we need to see more maturation in price stability. I think Bitcoin being a bit of a risk-off trade now at the moment is good. So that's how I see it. Is I think regulation will help, but I think it's not just regulation. I think it's the perception, like you're saying, in the public about, this just isn't used by cyber criminals or criminals in general. I mean, criminals are agnostic to whatever they're dealing with, whether it's fiat or whether it's Bitcoin or Ethereum. They don't care. So I think it's the education, and the pace of adoption is going to be slower than we thought. Well, what I thought at least, and it just takes a lot of time, especially now when people, the costs of their living is going up. They don't have as much money to invest, or don't have as much time to pay attention to this space, because they've got all these other worries about the cost of living on their mind. There's still the war in the Ukraine. China's looking risky. So that's sort of my 2 cents worth. I think regulation will only go a certain way, but regulation is good nonetheless.
I think that's very fair in terms of like the large price volatility that is a symptom of its maturation level is the key thing that's holding back adoption. I think you're absolutely right. Like buying something and then by the next day you've lost 50% of your investment. There's not many asset classes where you can achieve that. So yeah, 100% agree with you on that. So it's around the cycle of monetization, or the period of monetization, and what stage we're at. And when we get to the point where it is a more effective store of value, that's when I think institutions come in. So I think maybe the whole narrative that institutions are coming in, which was the narrative I think 2 years ago when MicroStrategy came in, Tesla came in, I think that narrative around what's going to drive the next big step up in Bitcoin price is probably inaccurate. I think perhaps even small countries like El Salvador will be before we get big companies starting to put Bitcoin on their balance sheet.
That's a really good point. And I think that real world adoption, like real world use cases. So you being able to walk into your barber shop and pay with Bitcoin, me being able to go down to Coles or Woolworths, or you in the UK, Waitrose, or in Singapore, Fair Price Finest, go in there and actually use your Bitcoin wallet, the Lightning Network, to pay for goods and services in Bitcoin, because that's one of the reasons why you can't actually call it a financial asset, because it's not cash. and you can't, none of the goods and services are being priced in Bitcoin. For companies, they can't use it as a functional currency because, it's not able to buy or pay for all its goods and services in Bitcoin, or demand payment in Bitcoin for all its products and services it offers to clients. So, I think more Bitcoin or Lightning terminals around the world, I think that will be a big step forward. And just on that, in Brazil, I'm not a fan of USDT. I know it serves a purpose, but I'm not holding any. But they've just announced that they're going to be partnering with a local Brazilian company to provide USDT through ATMs. I think it's 24,000 ATMs or something like that. So Brazilians can actually go out and withdraw USDT. I've got no idea what USDT notes or coins are going to look like, but yeah, that'll be interesting.
So physical notes of USDT, is that what you're suggesting? I need to look into that. I wasn't aware of that. That's interesting. But yeah, the Lightning Network is definitely something that excites me. But then that's an interesting one, because sometimes I mention the Lightning Network and people almost laugh at me in that they don't believe it's got the capability to facilitate the volume of payments that's going to be necessary around the world for the monetization of Bitcoin. Whereas what I've seen, it absolutely looks like it should be able to do that. But then I'm not technical at all, so I don't have that sort of ability to critique it. But I've used the Lightning Network, and I think it's absolutely brilliant. And I've been to presentations by people that are building on it and building toys or ATMs or different types of apparatus that use the Lightning network as its switch, and it's phenomenal what they can build, and it's super quick and at close to zero to transact the Lightning network. So it's brilliant, yeah, I'm surprised that it's not getting more airtime. So therefore, either I'm not tech savvy enough to understand that it's got limitations, or everybody's missing it, and it's in their blind spot perhaps.
Can I just read out the news release about USDT and ATMs?
Yeah, sure.
So it says, adding Tether tokens to ATMs across Brazil provides the opportunity to include more people in the financial system. So that's a good thing. But I guess they still need access to an ATM. Users of ATM devices across Brazil will manage to convert Brazilian reals into USDT or convert the stable coin into fiat while supporting USDT payments globally. So perhaps they're not going to get a physical USDT.
No, you don't. So basically, you'll put in Brazilian real into the ATM. It'll give you a QR code, and you'll scan that QR code on your phone and get the USDT deposited into your digital wallet. And if you want to withdraw value from your wallet with USDT, you convert that USDT into US dollars or Brazilian real, and you withdraw that, and you get the QR code, which sends your USDT to the ATM.
Okay. You see?
Yeah, I presume the ATM company just takes a margin.
Yeah, potentially. Yeah,
they'd need to.
I mean, that's one of the things that was demoed at the Lightning Network presentation that I went to by the guy that started a company called LN Bits, which is a very cool company. It's worth checking out the website. And basically, he just had a little suitcase there that you put 50p coins in. When you finished adding them, you just press a button, it gives you a QR code, and you scan your Lightning Network QR code, and it just deposits that money into your as sats into your Lightning Network wallet, which super quick, super easy, and at close to zero fees.
Yeah,
and you can install those anywhere. They are very cool. So yeah, all possible. So I have hope for the Lightning Network, and apparently the Lightning Network's liquidity is far above 5,000 Bitcoin now, which is the most liquidity it's ever had on its network, and transaction volume is up 420% year on year on the Lightning Network. So it's definitely growing. And that, I think, is what most of the Bitcoin meetups are most excited about at the moment. When I've been to Bitcoin meetups in Bedford at the Real Bedford football game and Bitcoin racing, there's lots of activity on the Lightning Network, which is good, because that's what we want, right? We want more use cases for Bitcoin. But the one point I'd make is, if you've got two monetary goods in an economy, the one that people will choose to spend is the one that they don't want to hold. So there's a point in history where gold and silver were both monetary goods or metals legally in the US, I believe it was, and everybody spent their silver because they wanted to hold their gold. So in the scenario we're in now, we can't expect people to hold Bitcoin if that's the one they have faith in long term. They'll be spending the currency they don't want to hold.
Mm.
So in a way, it makes sense that there's less transactions using Bitcoin, because I only use Bitcoin for the gimmick and for the novelty factor, but I don't want to spend my Bitcoin. I would rather spend my fiat currency that I'm holding.
Yep.
So
I know, but
that's why we don't see more activity. I know we've got to do our part to support it, but I'll buy the odd cup of coffee using a few sats, but I'm not going to go and buy a car with Bitcoin, because all I'm going to do is go home and then change my fiat back into Bitcoin.
Yeah, but I guess people need to see the terminals to know it's real. You can use it.
Yeah.
And they know how to use it. And the user experience is much easier than it has been.
True, but I'm saying that the argument that that people aren't spending it and using it is not a good argument against Bitcoin. In a way, it's an argument for Bitcoin, because people don't want to spend it.
Yeah. Well, I think people still don't understand it because they can't spend it. They can't see it. They can't spend it.
Well, they can give it to me. You can spend it that way.
Ranald, Mike, what are you looking to in the near future?
Okay, I'll go first. Near future, I think that I actually want to upskill myself a bit more on the technical side of blockchain. So being able to explain the hash functions and how blocks fit together and all that kind of stuff. I'm going to go a little bit more technical, but I know that that's not for everybody, but I feel like that's where I'm lacking in my knowledge. And so I'm going to spend a bit of time doing that. And I'm trying my best not to ignore like where Ethereum could go and what it could provide. And I'm trying to stay in touch with what's going on in that space, because it's so easy to look at Bitcoin and forget about everything else in the ecosystem. So I'm trying my best not to do that. So yeah, those are my two things that I'm probably going to spend some time on. And I'm toying with the idea of learning a programming language, because I feel like in this space everybody knows how to code and I don't, and I feel a bit inadequate. So I would like to explore that a little bit. There's me, done in a nutshell.
I think there's an endless amount of resources out there for programming, so I won't be short on that. For me, I guess I'm looking into, like recently I've been more looking into overall macro trends, so just researching what's happening around the world. I find, like for me, I'm finding that the fact that Bitcoin is no longer as heavily correlated to tech stocks in the past couple of weeks is fascinating, because the narrative for the past year has been it's been a risky asset. So it's been hard to try and find the reasons why Bitcoin's behaving the way it is. So what's causing it to jump from 19 to 20, 19 to 21? Where's this upward pressure coming from, where there is no narrative that, for me at least in the macro sense, to support it. But yeah, that's more or less what I'm looking at the moment.
Well, for me, I'm looking into how to help small trading firms, like crypto trading firms, implement financial control. Also with the accounting, just looking into the gas fees, the mining, whether that's a contract with customers, looking at issuance as well. How do we account for that? So just going more into the detail from the accounting and the control side. And finally, I had a look at, I heard somebody was offering interest rate swaps on the Ethereum network. So I wanted to look into that, but they're not live yet. And I thought, interesting, I wonder how that's going to play out. So yeah, just like what Mike was saying as well, just trying to be aware of what's happening with Ethereum.
That's very good. Actually, at some point, looking at the accounting for miners would be interesting, and how they account for the revenue and things like that. That'd be quite an interesting space as well from an accounting perspective. Well, guys, it's been wonderful talking to you both.
It's been a pleasure.
It's been lovely.
Thanks for the rumble.
Anytime. I look forward to the next one.
All right. Take care.
See you guys.
Thanks a lot, guys.
Ciao.
Bye.